Do you think inflation is just a monster that devours your savings? Today, we will show you how to transform this challenge into an opportunity to make your money grow. Welcome everyone. In this video, we address a growing concern: inflation. It's not just an economic term we see on the news. It directly affects our personal finances. But it's not all negative. There are also ways to use inflation to our advantage.
Favor.
Inflation refers to the general increase in prices and the fall in the purchasing power of money. This means that your money buys less today than it did yesterday. It affects everything from the cost of daily living to the value of your investments and savings. In this scenario, it is crucial to adapt our financial strategies. The objective is not only to survive in times of inflation, but to identify opportunities to increase our income and protect our assets. Today, we will explore how to adjust your budget, where to invest intelligently, and how to generate additional income, even in an inflationary environment. Now that we have an overview of the challenge, let's delve into how inflation specifically affects the economy and our personal finances. Inflation is measured through the Consumer Price Index, CPI, which tracks the cost of a basic basket of goods and services over time. An increase in the CPI indicates that prices in general are rising, decreasing the purchasing power of the currency. This rise can be caused by various factors. Among them are the increase in demand for goods and services, demand inflation, the increase in production costs, cost inflation, and expansionary monetary policies that increase the supply of money in the economy. Factors such as currency devaluation and inflationary expectations also play an important role. Inflation affects everyone, but differently. Consumers see their purchasing power diminished, which affects their ability to purchase goods and services. Investors may see the real value of their returns affected. However, for some sectors, as producers of primary goods, inflation can mean higher prices for their products. Understanding these impacts helps us plan and adapt our financial strategies more effectively. With rising inflation, it is essential to review and adjust your budget and expenses. Doing so can be the difference between barely surviving and thriving financially. First, review your current budget and classify your expenses into necessary and optional. Sacrifice your quality of life. For example, consider cheaper options for services such as telephony or streaming. The key is to find a balance that reduces expenses but maintains an acceptable standard of living. To reduce unnecessary spending, start by identifying and eliminating impulsive spending. This could include frequent unplanned purchases or recurring spending on things you don't use often. Use budgeting tools and apps to track your spending and spot patterns. Also, look for ways to cut costs on your regular spending, like using coupons, comparing prices, and making smarter purchases. Effective financial planning is essential in times of economic uncertainty. Establish an emergency fund that covers 3 to 6 months of expenses if you don't already have one. Invest time in educating yourself about personal finances and consider consulting with financial advisors. Additionally, keep a long-term perspective. Inflation can be temporary, so avoid impulsive financial decisions based on short-term changes. Financial planning and education empower you to make informed decisions and better prepare you for any economic eventuality. But inflation not only affects your expenses, but also your investments. Choosing the right investments during these periods can protect and even increase your wealth. During inflation, not all investments behave the same. For example, the effects on the stock market can vary. Some companies can pass inflation costs on to consumers and maintain their profit margins, while others can suffer. Bond investments may lose value as inflation erodes the real return on fixed interest payments. Commodities, such as gold and other precious metals, are often considered safe havens during inflation as their value tends to increase when the value of money decreases. In real estate, look for properties with stable rental potential or those in areas with growing demand. In stocks, consider companies with strong pricing power and sectors less sensitive to inflation. Inflation-indexed bonds may be an option safer in the bond market. It also considers investments in sectors that traditionally benefit from inflation, such as the energy and food industries. Diversification is vital in times of inflation. Don't put all your eggs in one basket. Spread your investments across different asset classes. This not only reduces risk, but also positions you to benefit from different sectors that can thrive in an inflationary environment. Including a mix of stocks, bonds, real estate, and possibly some commodities can help protect your portfolio from the adverse effects of inflation. Additionally, consider international investments, as inflation can affect different economies differently. Aside from managing your expenses and investments, another key strategy in times of inflation is to increase your income. Let's see how you can do it. One way to increase your income is to look for part-time or freelance work opportunities. Think about skills or hobbies you can monetize, such as graphic design, writing, programming, or online teaching. Sharing economy platforms offer opportunities in areas such as transportation, food delivery, or space rental. Also consider selling unwanted items online or starting a small home business. The key is to find something that you can do outside of your regular job that does not require a large initial investment and that offers a flexible source of income. Remote work has grown in popularity, offering opportunities for side jobs from home. Research industries that are hiring for remote jobs and see if your skills are transferable. Side businesses can also be a great way to make extra money. They can include activities such as online tutoring, consulting services, or social media management for small businesses. These ventures may require more time and effort to start, but in the long run, they can become a significant source of income. Examine your hobbies and passions to see if you can turn them into a source of income. If you like photography, consider selling your photos to image banks. If you are good at crafts, think about selling your creations on online platforms. Even skills like gardening or cooking can be turned into income opportunities by offering local services or classes. The key is to think creatively and look for niches where your unique skills can meet an existing demand. Increasing your income is a vital part of financial strategy in times of inflation. But in addition, protecting and increasing your wealth in times of inflation is essential for long-term financial health. Let's see how you can do it effectively. Inflation can erode the real value of your savings, so it's vital to look for ways to protect them. Consider aligning your savings toward assets that have historically held their value or even increased during inflation. This may include certain asset classes as real estate or investments in sectors that tend to benefit from inflation, such as raw materials and energy. It is also advisable to keep a portion of your savings in highly liquid accounts, even if they do not offer high returns, to cover unexpected expenses without having to liquidate long-term investments. For wealth growth, look for assets that generally outpace inflation. Real estate, for example, can offer protection against inflation through rental or appreciation in value. Investments in stocks of companies with strong fundamentals and the ability to manage inflationary costs can also be effective. Additionally, consider precious metals such as gold, which are often considered a hedge against inflation. However, as we have discussed above, it is crucial to balance these assets with a diversified portfolio to mitigate risks. In a complex economic environment, seeking professional financial advice can be very valuable. An advisor can help you better understand market trends, offer personalized recommendations based on your financial goals and risk tolerance, and help you navigate complex investment decisions. In addition, they can provide you with updated information and strategies to adapt to changing economic conditions. Remember, informed investment and professional advice can be your best allies in times of inflation. Before continuing, if you like this video, leave a like and subscribe so you can continue enjoying more content like this. Now let's continue. We'll explore examples and long-term strategies that can inspire you to make the best decisions for your financial future. Learning from those who have prospered in difficult times can offer us valuable lessons. Let's look at some success stories and how you can apply long-term strategies in your financial life. Consider the cases of entrepreneurs and investors who have seen inflation as an opportunity. For example, some have taken advantage of currency devaluation to export products or services, capitalizing on international demand. Others have invested in real estate in areas with high inflation, subsequently benefiting from price appreciation. These stories highlight the importance of an open mindset and the ability to adapt quickly to new opportunities. The key to thriving in any economic environment is adaptability and long-term planning. This means being willing to adjust your investment strategies and income sources as circumstances change. For example, investment diversification is not only essential for mitigating risks, but also to capitalize on different sectors that can benefit from inflation. Staying informed and educated about economic trends will help you make better decisions. Finally, it is essential to maintain a positive and proactive mindset. Focus on what you can control, such as your spending and investment decisions, and maintain a positive outlook. Accepting that inflation is part of the economic cycle will help you see it not as an obstacle insurmountable, but as a challenge to overcome. With planning, education, and the right attitude, you can turn a period of high inflation into an opportunity to strengthen your financial situation. Reflecting on these strategies prepares us to face inflation with confidence and determination. Today we have learned that inflation, although challenging, is not an invincible enemy. We have explored how to adjust our budgets and expenses, looking for ways to reduce costs without sacrificing quality of life. We have discovered how diversification in our investments can protect us and, at the same time, provide us with opportunities for growth. In addition, we saw how to increase our income, taking advantage of skills and seeking new opportunities. And most importantly, we learned about the importance of an adaptable and proactive mindset in managing our personal finances. Now it's your turn. Use this information to make more informed and adaptive financial decisions. In times of inflation, your creativity, flexibility, and financial education are your greatest assets. Remember, every step you take towards a better financial management brings you closer to your goals and greater economic security. Thank you for watching the video. If you like this video, don't forget to like it, subscribe to our channel for more financial advice, and share it with your friends and family.